trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this was the stock market on Friday. You can see we stopped right here. I mentioned that if we open below there, we'd be looking at an island reversal. As you can see, there's no island reversal here. We've gone up and we've made sharply higher highs already today. Look at these two gaps, folks. These are usually referred to as exhaustion gaps, but how high they can go, I don't know. All these gaps will be filled, but the question is, will they do it in our lifetime or not? And that's why I watch other things besides just the S&P, the NASDAQ, the Dow Jones, and the Russell. Because if you take a look at the Dow Jones, you can see we had a 200-point gap on the opening that narrowed it down to about 100 points. Here's where we are right now. We have done very little after the market opened. You can see we're still below the opening most of the day here with the Dow Jones. That doesn't count, because what counts is what that NASDAQ is doing, because once it's finished, you folks are going to see something historical happening. And the question is whether it'll be in our lifetimes or not. And I'm sure that it will be, but to the extent of my assuredness, I don't know. But let's look at the Russell, folks. Here's where the Russell was. The Russell made a new high. Let's get this up here. You'll be able to see it. We made a new high here on Monday, when the market gapped up, if you remember. Now you can see it's been selling off. There was your first 382 retracement here, folks, right there. There was it right there. There's your first retracement on the day right here. Had a very nice profit in it. And so, that worked pretty nicely. So that's what we try to do, is to find ones, that are easy to work with. And that's what my job is try to find ones that make it simple to see. Okay, now let's move on and we'll talk a little bit here about the crude oil market, because that was another one that we've been interested in for quite some time. And we thought that there would be a time here that we would start to see a down move. Now there's the big move and down. Remember, we said there was probably going to be a pretty good move to the downside from that high. And as you can see, it stopped right there. So what we need to do now is we need to go to the hourly chart to see why it stopped right there. Now there was a pullback from right there. Okay. Now, as you can see on the way up, we don't have any 382s to draw on. So what we're going to do now is to look and see. Well, you can see this one's not going to be 382 because it's not enough. So it didn't quite make it on that one. And there's really hardly anything else in here to lay anything. All you had on this is an ABCD pattern right here. There's an ABCD pattern right here, and it's acted relatively well, went right down to probably where it should have stopped. Yep, there it is, and that's what we've done. So there's not really much here telling us that the market could turn around, because we've had a heck of a run, folks. That's a $6,000 run in a matter of 7 trading days, as you can see here. There's where we are. And there's where the bullishness was, right down in here. And here's where we are right now. I think that we're heading down here. The reason why is that's your 382. This would also be, at that point, would bring you a ABCD pattern in there at the same time. On Friday, we're going to have Mike Moore as our guest, and he'll be able to give us some ideas of what he thinks is going to be happening with this one as we watch this unfolding. But the one to watch right now, of course, without any doubt, is the NASDAQ, because when the NASDAQ gives up, folks, there's going to be a vacuum in here, and it's going to be, people are going to be surprised. How surprised? Maybe I'll be the big surprisee. I don't know, but that's what we're watching. So let's watch. Let's go back to cattle for just a second, because I wanted to show you what we're watching, because what you're seeing in cattle now is what you're going to be seeing in the stock market very, very shortly. These patterns don't move around very much, but they do move. Now, as you can see here, we've dropped already 25 cents in cattle here in just a matter of 1, 2, 3, 4, 5 days. That's $10,000, folks. $10,000. And this is cattle. So let's keep in mind, there's the 61% retracement coming in off of that. Let's see where the 382 off of the big low is. That might even be right where we are today. Who knows? Yep, sure it is. We hit it there. There was the 382 of this low right here. So we're really oversold now in cattle. So we will get a little bit of a, well, we should get a bounce. We don't necessarily have to, but we would. Look at this. Look at this daily chart. Look how much we've given up, folks. See, that when the party's over, they don't take any prisoners. Or at least they haven't in the past. But maybe things are different this time, and they usually are. So let's move on here, and we'll talk a little bit about the market that everybody seems to be interested in. That's the gold market. We've talked about this. We're going to do it again, just so everybody can see that was not baloney what we were doing. This is just the last couple of days here. You can see these swings down. Last night we had another absolutely beautiful 382 pattern right in the middle of the night. We had two of them. There was one right there and one right there and one right there. And then since that time, it's been nothing but 382s all the way down. All the way down, folks. There's one. Let's just mark them in so you folks can see it, because this is what's fun about. There's one right there. Okay, there's another one right there. And I think we have another one we just finished. Let's just put that one in right here to see if that's correct. And then what we'll do is we'll check it to see if I'm correct. And then you'll mark it down and you'll, oopsie daisy, let's get this one lined up here. And there was your 382 right there. It's on it right now. There was your 382 right there. There's your 382 right there. So the $64 question is, we did break the magical $4,000 an ounce stuff today by just $10. Now we're having this little bit of a rally in here. But we said in the newsletter, and then if we'll take a look at this on a long-term basis, we're going to, I think is the 4-hour, wasn't? Tell me it was. Yes, there it is. Okay, now we have broken down below this last 382, okay? So that tells us that we've got a high probability of coming into this area right here. This may hold it right here at the 618, but the chance favors the prepared mind. So I would be willing to say that this is probably what we're going to be looking at. Now we've got another ABCD that is formed right here. Let's just look at that, because that's taken several days to complete. So let's just look at it. There's your AB leg right here. There's your CD leg right there. Now we know because of the down move, we've got to correct that by 1.27, and we're going to do that right now. And that takes us to exactly the low of the day, and now we're having that little 382 rally from right here. So we should get a rally, which we're starting. It's already rallied. It's already rallied $20, and it's only been for a few hours to get to that point. So that's the spot that we're looking at. Now, people have asked about the silver market, and silver's been acting, I haven't checked silver today, but it's been acting a little better than the gold. Let's get this up here. Here's silver, and we'll get this up and see how we're doing here. Yeah, it's actually doing a little bit better. It's doing a lot better. Okay, here's the silver. You can see silver's only down, it's how much? It's down quite a bit. But anyway, we've broken below that. Now, this was the important part. So we're going to go to the hourly to see that spot, because that was the 382 that started the down move on this. Okay, let's get it over here and see it. There it is right there. That's the one that started the big down move, and we've been going down ever since. We've done the same thing here. You can see the move downs. There's your other one right here. We'll be right back. Hang in there.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Put that out of the way here. Hold on, folks. I wanted to get up here. I wanted to show you this chart of Bitcoin because we completed the ABCD pattern here today. Let's get this up here so we can see it. There's your ABCD pattern. I don't know who that is. I can't miss. Okay, hold on here. There's what we have. It made the ABC. This was telling me over the weekend, you see, we were right here. And that meant that there was no risk off. Everybody wanted risk on, and that told us that we were probably going to go higher. That gave me the inclination that we're going to have another blow off top, which we've done so far in the market, and continues to be going higher, but we'll do one thing at a time. That's what I was trying to show you before. That's what we were watching. Okay, now let's move over here and get back up to our charts that we want to be watching. This was the silver. You can see we're still bearish on silver, but it's going to be down here. It's going to be a friendly hello and a goodbye very soon, but we have to wait. The number we're looking at in the gold is around 38.20. Okay, and the silver, it's around 39 cents. Let's just move that over, and I'll show you what I mean by that. If we come up and take the daily chart, and all we're going to be watching for now is a nice little, you can see we're having a pretty good break here now. If we're down 9 cents, we're looking for it to get right about there. Okay, because if you take a look at that from a really long point of view, going way back here, that's what's going to get you right to there is where we're looking at. There it is right there, around 43 cents, not 39 cents, 43 cents. Really good spot to take a look at the long side of silver. All right, now this is a big chart. Remember, we've taken out the highs. Let's just show you how big it is. We've taken out the highs of August of 2011. That was a monster ABCD pattern up here. Here's where we are. This might be the top in silver forever. I don't know, but all I know is, it's coming down pretty quietly. Even though it's dropped, 9 cents, it's still relatively quiet. It's taken 3 days. Go up pretty fast, you come down pretty fast. The same thing happens in the stock market. You see that chart right there? That's what's going to be happening to the NASDAQ very soon. It's no longer going to be El Fuego. It's going to be El Caldo. It's going to be gold, and then you want to be getting in short. Anyway, that's what we're watching here with the silver and the gold. We'll get this out of the way here. The good news is that we've had some information on our grains. They've started to pick up. Oh, we got market started actually to come down a little bit from that ABCD we had in the S&P. Let's move over, get this out of the way here. Okay, hold on. Let's get this up here. Take a look at our grains, because we were saying people were not going to stop eating, pasta, corn, and pasta, cookies, and bread, and they're not. And we'll just take a look at the wheat here. So much is happening, folks, that I can't keep it up. I can't keep it all up together. I mean, I just look at the wheat market, folks. Look at the big gap on the wheat. Okay, look at this. This is telling you that they're going to be doing some trading with wheat, I guess. So that's one thing. Now, remember, one of our favorites was the soybean meal, because we thought that would have some really good things. And all these are just chart patterns, folks. I don't know the diddly squat about the fundamentals of this stuff. I let Rich Anderson and these dudes, help me with that stuff. Well, let's take a look here at the more soybean meal. Just a second here. I had so many questions today on these stocks. Here's our picture on the wheat. We cloned this. We said we should see an equal move from there to there, and there it is right now. We're making it right now. Had a big gap up. That completes that pattern. We're up 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So we're due for a pullback. Watch for a 382 pullback when you come in the next time you want to buy some soybean meal, and it will correct. It'll come. It's nothing. Come down $800, that's nothing. So watch it right there. That's the one you want to be paying attention to. Or buy the wheat on a pullback. They're all starting to turn, and that's the whole thing. Not all of these things are going to go up forever, folks. Okay, now let's get out of this, and we will move over to, we're going to talk about the euro right here, because we're very bearish. The euro gave us a really nice chance to get short up in here today. Right, remember we talked about it yesterday. Remember, this is just a 4-minute chart. So if we go to the hourly, we're really bearish, because this thing is getting ready to go downtown. This is where we were selling it up here. And you can see it's held that level so far. This is, to me, folks, it's got the most bearish potential. Well, better be quiet, Pesavento, and keep your mouth shut and remove all doubt. Hold on. Let's get up here on the monthly. Okay, this is why it looks so ominous to me, folks. There's the monthly chart of the euro. I'm going to blow this up so you can see it. So many things are wrong with the world, folks. Anything could make these things go crazy. We've been up here now for 1, 2, 3, 4, 5 months at this level, okay? 1, 2, 3, 4, 5, 6 months at this level. Pretty soon, there's going to be a down day like this. It's going to take out these lows down in here, and that tells us that this ABCD is really a big one, because it's taken 3 years to complete, folks. Those don't happen very often. Here's another one. Look at this. This took 2 years to complete that ABCD. This one took a year to complete that ABCD. So that's why it's got this bearishness tied to it that seems like it's going to be going down. Now, people have asked me to take a look at that Canadian dollar that we looked at the other day. I said that was a very, very low risk trade, but it also had, didn't have a whole lot of potential. So there's the Canadian dollar. I think we had that up on the daily, didn't we? Let's see how it's doing today. Well, it's down now, but it's not down a lot. It's down about $1,000 from the 382 there, as you can see. There it is right there. And we're going to move this over right there. See how many days we're down? We're down about 10 days, and that's all it's done is drop this far. That's $1,000, and it's probably right at the 382 right now as we speak. Oh no, not even close. But I would have my stop here at break even on this, folks, because it's got a chance. If you made $1,000, yeah, that's okay. But I put my stop at break even, because if this works, this is going to be a really big one. Because the last time it dropped 2,000, this time it's only dropped 1,000. So that's why I would stick with that. Okay, you want to stick with the ones that are winning, get rid of the losers. That's what you're supposed to do. You don't always do it that way, but that's pretty much it. Okay, I did want to report on something. I've been working with this young man over in Europe, and he's only 21 years old. He's never traded before, and he had a chance to work for a company, and he did, and he took his chance on Friday. He sold the pattern completion on the NASDAQ, and of course you all know what happened. And he had no control, because by the time the market opened, it had already opened 300 higher, then went another 300 higher. So he got blown out. And I told him, I said, look, welcome to the wonderful world of trading. I said, it's probably the best thing that ever happened to you. Folks, I know you're not going to believe this, but one of the best things that ever happened to me is when I lost all my money in 1974, because I didn't know what the hell I was doing. And, well, I might still not. Anyway, that's what you do. You try to protect yourself learn to trade the ones that you can understand, but he had no control over his risk on something like that. There was a, item coming out with trade and all that stuff, so he put himself at risk. He lost 10%, that's all he lost, but that was his deal with the people that he were trading for. If he lost 10%, that was it. And he got filled at the low of the day. So you can imagine what it would have been if it got filled near the high of the day. So that's another thing you got to remember. A lot of these things just go crazy to the upside and also crazy to the downside. So we want to make sure that we cover those as we go through and take a look at these things. We'll be right back, folks. 877.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Okay, folks, I'll get to some stocks here, but this is the Treasury bonds for today. Had a little bit of a pop here on the report on Friday, and then, of course, all it really did was to go and make a ABCD off of this last major bottom. There was your XAB. CD came in right here. Now we're having a pretty good bounce here. We rallied a full point off of that low. There was your 382 right in here. So it's I'm still bearish the bonds, folks. I know they're going to drop interest rates, but this doesn't look like it wants to do very much. If we look at this on the long term daily, it's got a lot of problems right here at 119.27. Gets to there, it's going to have a great deal of problems because that's your 786 off of this, and that's the same way right here. Folks, I know you get really tired of listening to my rhetoric about the stock market and where it's going to go and all that. And I've been here before. I've danced with all these people, and I just wanted to remind you of a couple things that I've always done in the past. If we look at this long-term chart here, if you remember, this is when we had negative interest rates, folks. You remember, what was his name? Mohammed Al-Arian, the guy was it PIMCO at the time? And this was the greatest thing in the world, negative interest rates. You give them your money, and they're going to charge you, and they're not going to give you any guarantee that you're going to get your money back. Well, you see, that didn't last very long. That was back, believe it or not, that was 6 years ago, folks. They laid that stuff on us, and people ate it like it was tapioca. They're doing the same thing now. You see that pattern right there? That's El Fuego, baby, turned upside down, because that's what it'll look like when it gets down here. So it's not going to be much longer. Maybe not in my lifetime. Definitely, this will be the last dance for me. I'm sure of that. But for some of you folks, you're not going to see a high like this in the stock market again for a very, very long time. And when I stress the very part, it'll probably go straight up forever from here, but that's what I'm looking at today. I have to tell you what I'm seeing, okay? Now, let's just take a look at that. Go back and we'll do the same thing here with the crude oil, just to show you, just do the monthly crude oil, how things change, okay? Look at that. Remember the crude oil here? Look at this. Let's get this out of the way here. Remember this one right here? Goldman Sachs came out, $200 barrel, looks like it was a slam dunk, $200. It goes from 150 to 35. And they wrote a special report on $200 a barrel oil, okay? So just because people say that stuff doesn't mean it's going to happen, including me, because, I'm probably the worst of the lot because I get involved with this emotionally sometimes. Mainly because I enjoy doing what I'm doing, and I've been fortunate enough to make a couple bucks here and there. Not all the time, but, I do stand out aside when I see it's not working the way that I think it's going to do. And, oh, dear, yes, I've got Mike Moore's coming up today. He's supposed to be in the house right now. Oh, shut the front door. Al, I think we've got Mike Moore in right now, and I don't think we have him on. Can you check and see if Mike's in the room? Because I'm supposed to have him on. I got so many things going on, I forgot about it. So see if he can lock in, and we'll chat with Mike. And I did forget about it. Son of a gun. My fault. I don't write everything down. That's neither here nor there. Get this out of the way. So move it out of the way. Then we don't have to worry about it anymore. Okay. Hopefully we'll get up here with Mike. Evidently it's not going to work today, so we'll move on to talk about something else. Let's look at a couple of stocks, because some of these stocks have gone, absolutely berserk. Let's take a look at Tesla. I saw that come across the board up $25 today, folks. And you can see that's what a $25 move looks like in Tesla today, from there to there. It's getting back to this level right here. It's acted pretty bullish, and it's still acting very bullish. If we take a look at Apple, same thing. We're going to be, I want to watch and see. Look at this one. I'm afraid to even look at this one right here. Tucson, it should be about $900. No, it's only $298. Okay. All right. This is here's a perfect example of there's the Tucson Semiconductor, and Taiwan Semiconductor. That's what it's doing right now, and it's still looks bullish. And this Tesla, let's take a look at Apple. Apple's also on fire today. I saw that going to almost 270 just a second here. And I don't do these stocks, but I do watch them because people ask me questions about them. We probably gapped up. Well, we did. We gapped up again on Apple. You can see it did gap up. It's in the lower part of the range. We got as high as 267. It's right near the line. This is a bad tick. And that's what that's doing there. Okay, and then the next one was NVIDIA. It has made new all-time highs again for about the 3,000th time. And this really hasn't destroyed my premise of ABCD patterns, folks. Now here, it hasn't even made new highs yet. I thought that it had. See, there's the main thing. See, I'm looking at this on the long-term weekly, that this is a big high right up in here. There's your 1.618 expansion. That's at 193. We're at 191 right now. So this is still a valid pattern until it gets above 194. A couple, big orders, and it's already through. So that's what we're watching. Let's see what we got. Somebody's calling in about something, and we'll see what we got here. And Mike is on the line. Mike, how you doing, buddy? I'm sorry I got so doggone busy, I forgot. We're going to take a break here in just a second. But you got your charts up and ready to go?
Yes, sir.
Okay, why don't you go ahead and start, and then I'll gotta turn mine off here. Otherwise, I'll get a little bit confused, which is not easy to do with me, but I do. Okay, go ahead. Fire away, Mike.
Can you see my screen?
Yes, sir. Coming in great.
Okay. All right, so we'll start off with crude oil, I guess.
Yep.
Sound good to you?
Great.
Okay. So crude oil, we've had a big rally here the past couple of days. It traded above 57.43. I said projected 45 plus. That was a break above this formation here. We've seen $5.16 out of that, and then another bullish call above here at 60.09, which has brought in $2.50 of strength. And then this is rolled back over to here. So we still have a maintained gap higher in place here, which has also left a medium-term bullish reversal below down here, which warrants this of higher trade for days/weeks ahead. You may see some consolidation, but in general, that's what it means. If we see a maintained gap lower tomorrow, that would leave a minor bearish reversal above. And in the RBOB, or unleaded gasoline, similar situation. We left a medium bullish reversal below here 3 days ago, which warranted a higher trade. And
hey, we've got to take a little break, my friend. We'll be right back with you, Mike. There. Sorry for the delay, but we'll be back with Mike Moore of More Analytics, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Mike Moore, More Analytics. Please continue, Mike.
Thank you, Larry. Hey, I just wanted to back up a little bit for your listeners and highlight the importance of why it's key to watch the heating oil and the RBOB in conjunction with the crude oil, and also have a methodology whereby it dictates to you which one of those to be long or short at any given time. Right here in the heating oil, down in here, when I was on your show this day, it was a Friday, and we had just broken above this line. Now, everything else was bearish. The crude and the RBOB was bearish, but this was the first one to rear its head to be bullish. And that's when I also put in the analysis down in here, I have this little plus sign, equal sign, and negative sign. And the key differentials between the positive and negative. But from this time here forward, now remember, this is the 17th. If you were along the heating oil instead of the crude or the RBOB, this went on to make 12,247 per lot. The RBOB didn't break above this formation here until a day later on the following 10/20. And from here, that went on to make about 5,000 per lot. And then the crude oil didn't break until a day after that, here on the 21st, at which time that would have only made about 4,800. So you can see here, and also in these spreads, you can see just here in the heat crack spread, the major difference between being long the heat as opposed to the crude or the RBOB, and just that amount of time, making nearly $7,000 per lot more in just 6 days.
Yeah, it's a huge amount when you know what you're doing, that's for sure. You pointed that out to us several times, and thanks for bringing it to our attention again. Sure. So anyway, the RBOB's in bullish from these multiple levels. The heat has too. I'll take a quick look. Do you want me to look at the Brent and the gas oil, or jump straight to the S&P or the natural gas? Let's do the Brent and then do the natural gas too. People are certainly asking about that.
Okay, so the Brent, similar situation to the WTI. We left a medium bullish reversal below here 3 days ago, which again warns of higher trade in general for days, possibly weeks. Now we have this big spike here, so it's not unexpected to see some consolidation or a pullback before/if resuming any kind of more substantial higher trade. If we leave a maintained gap lower on the day tomorrow, that'll leave a minor bearish reversal above, but that'll be more effective if when we take out 62.96 in the process. And then let me just check one more thing here. Also, if we break above this line right here, that'll be bullish. That's a new thing that comes in at 66.40. Minus 0.3 of a tick per hour starting at. And the natural gas, we left a medium bullish reversal here 6 days ago. But 362.80 put this above a similar pattern in the D's to that of the Novi. We've seen 511 ticks of strength from that. Also got bullish above 375.50 for 384 ticks. And decent trade above this formation. This is a formidable formation, so this is definitely something I'd get on. That comes in at 408.40. Minus 0.4 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. And a decent break above there will project this upward 160 ticks minimum, 800 ticks plus maximum. If we were to break above there decently and back down through it decently, look for decent pressure to come in, at least back down to here for 125 ticks. I would also just note, I'm going to go up a time frame here for a second, that we are likely correcting against the move down from 575.70. So I think that correction could still have a period of time to go. And those initial exhaustion levels aren't even until up in here, 442.10 and higher. But it's still early yet for any of those to hold more than temporarily.
Okay. Now, natural. How about the natural gas?
We just did the natural. That was the natural.
Oh, I'm just looking at that's why I asked you.
Sorry.
Let's go to the S&P.
Okay, yeah, no worries. So the S&P, I got this chart right here. Those of you who've been watching, just update us. Okay, we've been bullish overall from 35.02. We've seen 3,388 points to the upside and a little bit more here today. A lot of other bullish calls in here. If we were to break above this decently, I think we just broke above it decently. So if we fail back down through this line decently, that's going to warrant decent pressure. That line is going to come in at $68.70.60 plus 0.19 per hour starting at 1:30 p.m. Eastern Standard Time.
Okay.
And if that starts off, then you can point that out and tell you. But I would just note this, that there is a very significant formation down in here, which it would take a couple of days likely to get down to. It happens to be at 56.14.29 plus 0.26 per hour starting at 1:30 p.m. Eastern Standard Time. And below there would project this downward 200 points plus. But let me just show you one thing. I prepared this chart for your audience. This is a very macro chart of the S&P 500 from lows here in 2020. I believe that we were likely in the last stretch of this move up. We had held this initial possible exhaustion zone here on the bottom of it, rejected out of the middle of it, and then held the top of it 3 times before breaking above it. Above which I said on one of your shows we're likely headed to the next zone. So the next zone is just two different areas. But the bottom of that comes in at 69.91 and a quarter, and the top of it comes in at 72.99.36. If this causes a bearish correction or an upper or one from up here, that bearish correction should exceed 1,335 points to the downside from whatever the high is. So it should be a significant correction when and if that comes. So if we were to hold this exhaustion level, for example, up here and then roll over and take out this formation, that could be one of the catalysts to see that to the downside.
Listen, Mike, thanks for joining us, buddy. Next time I'll be on the ball, but today I just had so many balls in the air, I let 3 of them hit me in the head. So thanks for joining us, pal. Appreciate it.
Always an honor to be on the class today, right?
Thank you. Mike Moore, folks. Mike Moore of More Analytics, folks. The contact information is right there. We'll be right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hey folks, this is the NASDAQ going back the last 4 years. I wanted to show you something because it's very unusual. You can see here that we had a breakaway gap here that's never been filled, and we have another one this week that so far has not been filled. That's very, very unusual. You can see we're almost at that ABCD expansion of that move. That's just up around 26,000, but it might go to 28,000, 29,000. But to have 2 gaps like that, try to find one back here, folks. A weekly gap. That's not even one right here. Here's one right here. That was the election one. Remember, the tariff, taking off the tariff thing. But anyway, that still hasn't been filled on the downside. We got this one and that one. So there's 3 gaps in here. They probably won't be filled ever, but by golly, I got to bring it to your attention. But this is what we're watching. If we look at this on a monthly basis, which we were going to do right now, you'll see pretty much the same thing. There was our 382 pullback. That was into that April low, if you remember that. There it is right there. And look what we're doing right now. We're just running and running and running. We could go some more. Now, the other markets are not always doing that. You know, the Dow and the Russell look totally different. but this is certainly one of the most, it is the most potentially, well, there's no question about it. It's been bullish since March the 5th of 2009, and it's still going up 16 years. Someday it'll stop, but maybe not in our lifetime. So that's what we're paying attention to here today in these markets. Tomorrow, our guest will be Stan Harley. On Wednesday, it'll be Paula Webb. Thursday, we're going to have Jeff Hughes. And then we had Mike today. He was supposed to be Friday, but I had the day is wrong as usual. So that's what we're watching here this morning. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow, and try to do something nice for your neighbors, folks, because a lot of folks are having trouble out there.